Is my mic on? Yes. Okay. Well, thank you all for joining us on this last session of the last day of the Fragility Forum. Today we're going to be talking about financial sector stability, integrity, and inclusion in FCV settings. So it goes without saying that the financial sector is a fundamental element of economic development. It provides the underpinnings of economic stability and growth, and really the plumbing through which all economic activity flows. Building a robust and efficient domestic financial sector actually is a very special challenge in FCV settings. Both the institutional and regulatory underpinnings of that financial sector that are required are likely to be weak because of the uncertainty in the environment and so many other factors. And in addition, straight fragility can really impact the stability and functioning of the financial sector. And in the most difficult settings that are affected by conflict and political upheaval, the very stability and integrity of the financial sector is affected. So in this session, what we want to try to do is contribute to demystifying this relationship between financial sector development and FCV, because it's a topic that's very under-researched. But I'm going to admit from the outset that in this session, we're not going to do what we said we were going to do in the description of the session because it's too broad. And it's just way too big of a topic, which ranged all the way from financial sector stability to access to finance for SMEs. We're not going to accomplish it today. So what we decided to do is to really try to focus on, in particular, on these most difficult contexts, especially given the panel that we have. We wanted to dive into that and really look at where there's an actual breakdown or risk of breakdown in the financial sector and the services it provides and those activities. So where instability actually threatens the central bank and its ability to regulate, disrupts correspondent banking, payment systems, and the like. So that's what we're going to actually focus on today. We want to try to ask the questions and understand how does instability or political upheaval, coups, and conflict actually affect financial sector stability? What kind of actions could be taken upstream? Is there any kind of preventive action that a central bank or other regulators could take to prevent that from happening? Is there anything that we can do to anticipate it and mitigate those effects? So that's the conversation that we're going to have today in the room, and also to explore are there other alternatives and solutions? So we have a great panel with us today to talk about this, with a lot of experience from a lot of different perspectives. And so I'll start online. We have Erica Moret, who's an associate editor of the Journal of Global Security Studies, a senior researcher at the Global Governance Center and Center for Humanitarian Studies at the Graduate Institute in Geneva. Also online with us is Jihad Al-Wazir, who's the Assistant Director for Monetary and Capital Markets Department at the IMF and the former governor of the Palestinian Monetary Authority. And in the room here is with us Warren Coates, the former Assistant Director of Monetary and Capital Markets Department at the IMF. And last but not least, Jean Pem, the Global Director for FCI at the World Bank. So thank you and welcome to you all. So I'm going to start with Warren. So let's start by understanding better the types of situations that we're discussing here, where countries are faced with these challenges to the fundamental workings of the financial sector, the ability to provide money, to undertake transactions and make payments. How have you seen this actually play out? Can you share a few examples of what are the sorts of ways that these crises have unfolded in your experience at the IMF when there's been a political coup or conflict, and what has been the impact and the response? So we could start to understand in the room really what are the workings of this, of the mechanism through which the political crisis plays out into the impact on the financial sector. Over to you.
I'm going to divide my comments between two very different sorts of experiences. One, the transition of former Soviet republics from central planning to market economies. The other, several post-conflict countries recovering and reestablishing, and at the same time also transforming to some extent the money payment and financial systems that they had. So starting with the collapse of the Soviet Union, I led IMF technical assistance teams to the central banks of Kosovo, Kyrgyzstan, and Moldova in 1992 through 95. When the Soviet Union collapsed, which was the end of 91, the inflation rate for the ruble, which was the currency of the entire Soviet Union, went from around 20% in 1990 to 2,500% in 92. So that was the environment in which we landed the first few times in Kazakhstan and Kyrgyzstan. By the way, this being the last session, I will do this storytelling wise to a considerable extent. The collapse of the Soviet Union and the new membership of 15 newly independent countries was a big pill for the IMF and the World Bank to swallow. We were not prepared and staffed up to do all of this, so we were learning as we were running and drawing a lot of assistance from other central banks to join us and help. When we arrived in Almaty in Kazakhstan, well, first of all, what I was going to say was that given the scarcity of our resources, we doubled up. We did double missions, especially given the distances to Kazakhstan and Kyrgyzstan, which are right next to each other, but there was no air service for a period of time. We had to charter private jets, so we just did them back to back, one after the other, which is one would have been exhausting, two was super exhausting. The environment was one of chaos in which people were quite excited and eager to learn all that we might be able to share with them about how to become a market economy, or as they put it, to become a normal country. They wanted to be normal. And they had no established experience or institutions that a normal economy would have, that would sort of be the guardrails that would lead them along, and within which innovation would take place and all this. They had none of it, and it showed. Walking down the street, it was amusing to see all of the little stands along the road along the sidewalk of people selling stuff that was the most incredibly mismatched collection of items. It was whatever they could put back into their car. For Almaty, it's near the Chinese border. So some people were driving in stuff from Germany, because there was, at that point, about 5% of the population was German. Most of it came from China. So whatever they get back into their car, they set it up on the road, and they just, none of it went together. So it was interesting to watch as institutions and knowledge and sort of understanding of how markets could operate more efficiently, et cetera, evolved, and that takes time. The story I want to share, or the two stories of this side of what I want to talk about, in May of 92, the IMF organized a meeting in Tashkent of all of the central bank governors of the former Soviet republics in order to discuss currency. Would they continue as 15 independent central banks to use what was now becoming the Russian ruble? And if so, what sort of cooperative rules for management of its supply throughout the region with 15 independent central banks? What would that look like? And we had set out what the elements we thought would be. The alternative, of course, would be for each of them or any one of them, to introduce their own currencies. At the end, all of them chose to introduce their own currencies. And 1 year later, I was in Bishkek in Kyrgyzstan in May. I think it was May 10th that the SOM was introduced, when they introduced their currency. And I want to back up a bit to say virtually all of this was new to us. At the IMF, we talked with central banks about management of their currency, et cetera. We never really talked about the underlying payment mechanisms and rails by which money was moved around, or how currencies were designed and who printed them. And that just wasn't, anything we needed to pay any attention to, because in the world we usually dealt with, all those things sort of got along okay. And so we were addressing the management of policy and currency and so on. So all of this was new to us. The accounting systems were really strange at first until we understood them. The first takeaway, and I'm really addressing the technical assistance audience, not the investors who were in the room before we came in, is that you really have to learn, understand, and know what's there, the history of the institutions, the culture, and the condition of all of that at the moment, and what kind of ideas and aspirations that population has for where they want to go. And when we landed in the former Soviet Union, we really didn't have much of any of that in our heads yet. But it's a critical part of doing a successful job. So a year later, May 10th, 2093, when the Kyrgyz introduced the SOM, we had done a lot of work with some smart people at the central bank who had also for years been reading on the side about how bill markets operate and auctions operate and all the other financial instruments that we take for granted in the West. So they had quite a good understanding of many aspects of this. But I can tell you, one of the most frightening days of my life was the first day of the actual active existence of the SOM, where 3 new markets that had never existed there before were launched. One was the foreign exchange market, selling SOM for dollars or Deutschmark. Euro wasn't there yet. The second was a treasury bill market, selling government securities by auction. And the third was a credit market by auction. Prior to that, the central bank issued money into the system by a schedule of allocation to different banks at the price set by, the interest rate and terms set by the central bank. This is the first time they had ever auctioned credit or auctioned anything. And I am very happy to report that it all went very smoothly, but I was scared to death as we watch this unfold. I want to leap from that to the post-conflict experiences, which were terribly different, because along with reinvigorating, reestablishing a viable currency and its management and payment systems and so on, a very important part of what also needed to be done, and this is especially the case, say, for Bosnia, is to do these things in a way that contributes to softening, if not more than softening, the deep hatred that existed between the people who had just ended a civil war. So we had very much in mind, but I want, before getting to Bosnia, I want to spend a little bit of time on Bosnia and Afghanistan in particular, but I want to start with Iraq, because that's the worst of all possible examples.
Or we're going to have to start with Iraq and end with Iraq and come back to you on Bosnia and all the other places.
Oh my goodness, so many good stories to tell. All right, so on Iraq, this was a 100% United States illegal invasion of a country and governance, etc., for several years. We arrived to meet with an American university president, I think he was, I forgot his name, but he was acting sort of as the treasurer and the finance minister. And he had a perfectly good idea that one of the quickest ways of getting up the quality of banking, all of the aspects of, from accounting, credit worthiness, evaluations, and the whole thing, it would be to get as quickly as possible foreign banks to set up and operate. We totally agreed. Very, very sound aspect of importing a lot of modern know-how. But from there, his next demand to us was, and I promise not to take more than another minute and a half on this, was to give us as quickly, because the IMF was going to write the banking law and so on, give him as quickly as possible. I mean, within 2 weeks, he said, a law for licensing banks. Took a little while to explain to him that no reputable bank would come and seek a license if they didn't know what the rest of the banking law and regulations were like. So he conceded reluctantly that, well, maybe we would need a few more weeks and give him an entire law. To cut this short, the normal approach the IMF takes in drafting, and I've been involved in drafting central bank laws and banking laws, not as the lawyer, but as the economist working with the lawyer, is that we spend lots of time. We might prepare a draft of what we think is an appropriate starting place, but then we would spend months going through line after line with the local lawyers who knew their system far better than we ever would, and coming to a mutual understanding of what would be suitable and appropriate for them in light of our also understanding of best practice internationally. So this was a process that involved both sides for quite for several months. But he insisted, and we reluctantly delivered. And a year or so later, I lived in Baghdad for a couple of months, which is not typical of IMF World Bank. We usually go for 2 weeks at a time. And I was, in addition to 5 2-week trips, I lived there for 2 months, which was not pleasant. At one point, the deputy governor came in and I said, this is not in accordance with the law. He said, what law? I said, the banking law that you guys adopted. He said, oh, you mean the one you guys drafted? He said first of all, the translation is terrible. Secondly, nobody reads it. Nobody pays the slightest attention to it. Okay, so that is a lesson.
Absolutely. And thank you, Warren. And actually, I want to go to Erica, and Warren's already sort of laid out this tension between what there might be in terms of expectations, in terms of the international financial sector and banking system, and what we might see as a reality on the ground. So I want to take sort of the same motif to you and ask you about challenges to financial sector integrity, and what does it actually take in terms of ensuring that the financial system operates in a clean, transparent, and accountable way? How do we deal with these issues, and what are some of the challenges to that, and what are some of the requirements that you're seeing that we're trying to meet, but that where there's a huge gap in terms of what's actually possible and available in the financial sector in these kinds of challenging contexts? Over to you, Erica.
Thank you. Well, first of all, thank you very much for having me here. And apologies, I can't be with you in the room today. It's a great shame. I'm dialing in from Switzerland. So I've been working on the topic of sanctions for around 20 years now. And in the last 10 years, focusing to an ever greater degree on the ways in which the growing complexity of the compliance landscape today is contributing to pressures facing financial integrity around the world, and also some forms of fragmentation of the global financial system. And of course, ultimately, the outcome of this is a decrease in resilience in FCV environments. So I think this is a very pertinent topic to talk about today. So if I could first just outline to you, many of you will be very familiar with the kind of regulatory environment facing many companies and banks and other actors around the world. First of all, is to start off with sanctions themselves. While the use of sanctions under the United Nations framework has stalled somewhat in recent years, we've seen a real explosion in the use of autonomous sanctions around the world. And that can be those that are adopted by governments, particularly the United States and a number of close partners, but also by regional organizations, first and foremost the EU, but also every other regional organization around the world has now used some form of sanctions or another against its own members, with the European Union being the only exception of a regional organization that uses sanctions as an external tool of foreign and security policy. And we now see these coalitions of autonomous sanctions players, sanctions actors working together, often in close coordination, to address a variety of threats to global peace and security, and also other breaches of international norms and laws. And we see them working together in a way that we could perhaps term plurilateral. Some call these types of sanctions unilateral, but in reality, there are often 20, 30, 40 countries working closely together outside of the multilateral framework to impose a whole host of different types of sanctions. A growing number of targets around the world are now under sanctions. These measures are being imposed to tackle a growing number of very important objectives as well. The geographical spread is growing, and the different actors around the world making use of sanctions is also growing, with what has traditionally been more of a Western tool is now being adopted by a growing number of countries elsewhere around the world as well. So we're seeing this increasingly complex compliance landscape and web of different regulations. In addition to the sanctions, we tend to see in numerous countries counterterrorism regulations, also AML, anti-money laundering, and CFT measures to combat the financing of terrorism. We also see other related regulations such as export controls. We have listings of the Financial Action Task Force, and we also see a variety of criminal laws, which cumulatively serve to raise the risks involved for different stakeholders, different actors operating in a number of different countries around the world. And so the outcome is for banks, for other payment platforms, financial institutions, really payment platforms of all kinds, but also wider private sector actors. We see this growing compliance burden when it comes to the need to conduct due diligence, know your customer checks, very expensive burden, kind of bureaucratic burden imposed on these institutions, and also quite delicate cost-benefit reputational calculations that are also made. If I can give the example of some research that I was doing recently with UNDP and later Norwegian Refugee Council, and actually latterly with the World Bank Group as well on Afghanistan, one of the banks that I interviewed as part of this research cited the need to involve up to 50 banking staff members to check one humanitarian transaction to Afghanistan. So even though there are really dedicated people in many banks trying to service transactions to so-called high-risk jurisdictions around the world, often the cost and the bureaucratic burden of doing so leads to something of a chilling effect. So what we have now is this phenomenon of financial sector de-risking or banking de-risking that has been described as a global crisis by the World Bank, the IMF, the Financial Stability Board, the Financial Action Task Force, the G20, and it's a growing problem. What we know, and I'm sure those of you who are here today will know, that there are a growing number of countries around the world that are now either partially or fully unbanked. Some of these countries, like DPRK or North Korea, have, of course, never really been part of the international financial system, whereas others, such as the case of Syria, a country I've been working on closely for around 10 years, have seen a very rapid decline in banking channels. In something called the Compliance Dialogue for Humanitarian-Related Payments to Syria, that I was coordinating on behalf of the Swiss government and European Commission for around 5 years, we charted the number of correspondent banking relationships to Syria. And when we began the project, there were around 12. When we ended the project around the time of the pandemic, there were 4 left. And at the latest count, a few weeks ago, when discussing these topics with a number of experts and practitioners, the conclusion was there's possibly only 1 banking channel left to Syria. But in reality, the vast majority of actors are having to use alternative money value transfer systems. NGOs are having to transfer cash in suitcases. You know, it is not easy to make use of banking to Syria, but also a whole host of other countries. We also see this problem of over-compliance extending across full supply chains in trade, supply chains, for example, of essential goods. In some research we were doing recently in Geneva for the last 3 years, we found examples of really quite serious over-compliance in every conceivable part of supply chains dealing with medicines, food, medical devices, vaccines, and so on, to countries like Syria, Afghanistan, Venezuela, Iran, North Korea, that are under these very complex sanctions regimes. So even when transactions and trade and so on are technically allowed under the sanctions and the other regulations, many companies and banks simply choose to have a complete blanket ban on interacting with certain companies. So even though there may be humanitarian carve-outs, exemptions, licenses, and so on in place, we still see this worrying and worsening problem of de-risking, over-compliance, and the chilling effect. So just to conclude, we're thus seeing this acceleration in the fragmentation in global trade and finance, involving a growing number of countries. This impacts on humanitarian assistance and also other NGO activities around the world. At one recent major humanitarian conference, one of the world's biggest international NGOs said that payment issues are now the #1 threat to the humanitarian space. That's the #1 challenge that humanitarian actors are now facing in their work, is difficulties remitting funds, particularly cross-border, but also domestically. We also see this with remittances. Remittances serve as vital lifelines to many countries around the world, and of course work in a counter-cyclical manner to economic health in most countries that benefit from remittances. And yet remittances are also falling foul or facing the same barriers and bottlenecks that humanitarian actors and companies are facing when seeking to send funds to or from or around these same countries. And just to end on a note in terms of why is it important that solutions are found to these problems, what we know is that not only there are major humanitarian considerations, of course, and implications for the well-being and health of vulnerable communities, but we also know that these types of financial exclusion of entire or parts of countries can be counterproductive on national security grounds as well. We know that financial exclusion can serve as a driver for new armed conflicts, for human rights abuses, particularly modern slavery and human trafficking. We also know it can serve as a driver to exacerbate gender inequality and poverty and so on. And it can also fuel violent ideologies and extremist ideologies. So it's vital that, in my view, at least, the international community work together to find solutions to tackle this growing problem, which unfortunately still remains a rather niche topic, kind of outside of the economic circles that you will all be part of. So I'm really looking forward to hearing the rest of the speakers today and thinking a bit about the solution side as well. Thanks. Back to you.
Thanks so much, Erica. And I think, you pulled together really why this is so important. And in terms of whether it's humanitarian actors, development actors, the public sector, the private sector, we're all using the same financial rails to get money through the system. In fact, it's probably the illicit financial flows that maybe have an alternative. So getting these to work is really, really critical. And you've outlined really the scope and complexity of the challenge, in terms of compliance costs, the complexity of the different layers, and also autonomous sanctions or over-compliance that works through its way through the system, through the international banks. And so there's a lot to contend with. So I'm going to now go to Jihad Al-Wazir and ask you, Jihad, to really think back. I think it was 2007, if I'm not mistaken, when there was a political and security crisis that gripped Palestine, and we had Gaza came under the control of Hamas and separated from essentially the governance structure that is in place by the Palestinian Authority in the West Bank. And at that time, and you can correct me if I got the year wrong, you were the governor of the Palestinian Monetary Authority. And I think, in that situation, I suppose the key question on your mind, I'm not sure if it was put exactly that way, is how do we make sure that Gaza does not become one of the unbanked countries, as Erica just put it, and how is that preventable? Is there something that you were able to do to make sure that it didn't go down that path? And what can you share from that experience, and what can others learn from it? Jihad, you're muted. You're muted.
Sorry. Thank you for this opportunity, and just want to, I'm conscious of time, so I just want to echo, Erica was right about the impact of de-risking. And for the Palestinian side, this was a critical issue, particularly after Hamas took over Gaza. And one of the key things that we were able to do is that to maintain the independence of the PMA, or the Palestinian Central Bank in the making, to ensure the continuity of correspondent banking and the transfer of remittances through the financial sector. And because Gaza is a prison, really, there is no access to the external world without the banks, especially during periods of closure. It was important to build trust in the system and ensure that we have a good compliance and AML-CFT structure. And we face many difficulties in trying to protect the financial sector from intrusion by Hamas when they took over the Gaza Strip at the time. But also, looking at fragility in general, I mean, it's not just AML-CFT. There's so many things need to happen and to be done right in order to try to make sure that the financial sector is contributing to the economy rather than just to the elite, to build the institution of the state, and the central bank is traditionally the core economic driver in any economy, through an environment or an ecosystem where there's a lot of fragility. Institutional framework is not complete. The legal framework, the laws are not either not on the books or they're not being implemented, and a culture where the expectation that institutional capacity and governance is very weak. And so for a central bank to develop really has to do is to focus on building trust with the public and the stakeholders, and focus really on institution building and governance, and particularly to do internal reforms to ensure that people can begin to trust institution. And that doesn't come overnight. It's not like, like you can be trusted overnight. You have really to think of it as a process, and then you incrementally build and make sure that you try to progress within this environment and try to take advantage of every opportunity to improve the system and to ensure good practice, or build to develop to become best practice. So, for example, in the PMA, this issue of trust and was very important to us, and then so we embarked on internal standards, developing ethical standards. We were like one of the few institutions in the Middle East where we had an independent ombudsman, an independent audit office, an ethics office, which basically focused on ensuring professionalism and ethical standards and trust within the organization, which also translate to our relationship with stakeholders, like with the banking system. And then and this was an ongoing process, but at the same time, trying to push the legal reforms within our, to the maximum, to the external, to the banking system, and try to develop a clear legal framework where, in addition to that, also to develop a proactive communication with all stakeholders to explain what we're doing, to be clear and really focus on not to overpromise, which was really critical to us, is to build, for example, when we build the payment system, we didn't inform the public about it till like we were 80% complete. Because of previous experiences of failures of attempts to develop a payment system. And then one of the key issues was also building AML-CFT compliance. And it was not just for us. We created partnership with the banks, because the banks need the correspondence. And in order to maintain the correspondent banking relationship, we needed to ensure that we have a competent legal framework, ability to KYC customers, and we were basically facing de-risking almost on a monthly basis, and but we were proactive in communicating with the international community, of working with international institutions like the IMF and the World Bank, with getting expertise, and building really kind of like an island where we built a firewall between us and nefarious actors, and prevented their entry into financial sector. We closed branches, we penalized banks that violated the law, we fired general managers, we restructured boards, we reformed, and until we got the credibility that is needed, at the end, and we cooperated with U.S. Treasury at the time to show them what we're doing, and then to engage with them, and then until it was validated by external actors. And then also, in terms of building the infrastructure, we benefited from moving to more advanced technology, like in the payment system. So we can leave legacy systems. So we developed the efficient payment system and technology to be able to process payments as quickly as possible and deliver them as efficiently as possible. And then one of the key issues that needed to develop is to really the proper and right information. And so developing, closing the data gap was one of the key issues to be able to be a good regulator. and doing this in cooperation and in consultation with the banking system, recognizing that the risks that we all face are similar. So just like we cooperated with compliance, we also cooperated on evaluating the risks that we faced because of the occupation and because of not only do we have the normal financial risks that every system face, the risk to financial stability, but we also have the added complexity of conflict that we needed to address. And by creating like a crisis group between us and the banks, and by using tools like scenario planning we recognize our fragility and we know when bad things happen, what would be the outcome, and try to address those in a professional manner in a way that we developed a scenario planning framework where we would have retreats with the banking system. And then we developed a business continuity framework to address these risks. And based on the scenario, we created indicators, and then we created measures to address those indicators. So in the case of Gaza, we predicted through our scenario planning the split in the government and potential loss of control in the Gaza Strip. And we had implemented measures to protect the financial sector and in a way to ensure the continuity of business services in Gaza and prevent the collapse of the banking system in Gaza. And we explained to everybody through communication, through interaction with members of the Legislative Council, on both parties, by dealing with the business associations, with the contractors, with the at every level, communicating with the public, explaining what we're doing and why it's important to ensure our compliance and protect the financial system.
Thank you, Jihad.
The amount of so and that was very helpful during the war because, for example, on the business continuity side, we had we enforced on the banks generators, rationing of fuel by bank. The banks, each branch had to have reserves, enough fuel for the generators to work, using solar panels as an alternative to electricity. And when the war happened in 2014, the banks continued to operate and were able to open. Through our information system, we had placed excess liquidity in the system, so cash was needed. So we had the cash in the right place when it was needed. And then we were able to deliver and operate even during, when there was a ceasefire. And I can tell you, even now in Gaza and with the genocide going on, still elements of the financial sector is still operational. There's a couple of ATMs working that still receive money, and there are a couple of branches out of 47 branches that are still operational that were able to deliver salaries in the past months or so.
Thank you, Jihad, for that. So, Jean, I'm going to come over to you, and I asked Jihad about what they did to respond in order to prevent Gaza from being unbanked. And almost the entirety of his response was about measures that they had taken before, which I think is telling. And there was a lot in what he said about building trust, building relationships, and a lot of these preventive measures that are really about developing the financial sector before you get to a crisis. So, of course, the World Bank is very much engaged in FCV-affected countries in the financial sector. And in addition, the World Bank has also gotten involved where there have been disruptions in that financial sector, where correspondent banking, payment systems, et cetera, have broken down. So can you tell us a bit from your experience of some of these very specific situations where the bank has intervened, where there has been a disruption, how much of it has been about what was done in the moment and how much of it has been about what was done before, what worked, what didn't? Give us a couple of examples, recognizing that we're super short on time, but I don't want to cut you short. So what we're probably going to do is I'm going to ask you to talk for about 5 minutes or so. We're going to check the room if there's any questions, and then we're going to try to come to maybe what we could see as alternatives in the future. Go ahead.
Thanks, Nabila, and thanks very much for organizing this panel, because I think we need to also tell the stories on the financial sector and fragility a little more. So what has just been said is super important. Actually, I agree with all the points being made. So let me try to turn with a couple of additional examples, but also some of the lessons learned on the bank side. So a couple of examples of what we have to deal with. So the first one is something I did before joining the bank. Coup d'etat in a country, then the people doing the coup d'etat want to access the cash in the central bank. What do you do? And in that case, I was on the French side, we send the military to just protect that money. So it sometimes starts there. Right? In that case, they ask us to provide the French military. But I think that's where you realize, wow, it started that basic, and we knew that the mutiny was trying to actually break the vaults, etc. So that's one example. Another example, on that side, I was at the bank. The weekend before the annual meetings, the US sanctions banks, a major bank in a Central American country. Immediate run. Everybody run, depositors, long lines, etc. The whole system goes down. And what is interesting in that situation is that it was about corruption, it was about connection, organized crime in the country. It's a very fragile country. So lots of legitimate reason for which the US did that from a money laundering perspective. But immediately you create a crisis in an already fragile country and you lose trust in your financial system in 5 minutes, just issuing that. And these are the consequences. And of course, we spend the weekend working with the team, etc., on what can we do, how to absorb the shock, and then fixing the system, which was bank restructuring, etc. The third example, and that one is the current and past, is Somalia, where we started a lot of the engagement at the time of correspondent banking, Barclays shutting down the remittance corridors coming from the UK. And that's the first lesson. I think that's funny because when the team prepared the brief, they all emphasized that. Make sure that you have the right diagnostic. And it's even more important in fragile country because of the diversity of situation, but because also sometimes of the temptation to cut and paste solution that happen elsewhere. This doesn't work. So you really need to make sure that you understand the system. So I'm going to look at the intersection of payments and integrity and using that Somalia example. We initially thought that was a payment system issue. So the first solutions were payment system solution until, second lesson, engage with everybody. Digging much more, we realized it's actually not a plumbing issue. It was an integrity issue. But it was an integrity issue on which there was no one solution. So some of it came from regulatory guidance in the UK. Some of it came with compliance of the money service provider. Some of it came, what Jihad just said, communication, explain what you're doing, communicate to the world. But some of it came from something which was right, which was there was no actual supervision of money service provider in Somalia, so the level of risk was considered much right. So then we did something, we helped the central bank by actually procuring a consultancy firm by the bank to help raise the bar of compliance of the local service provider so that in the UK, they were more confident that the money was going where it should go. So I'm saying that as examples that we've been able to deploy a lot of tools, but it starts always by making sure that you have the diagnostic right and you understand also what's happening with the stakeholders. Now, in parallel, and since in Somalia, we've been working both on the domestic payment system, including the classical deployment, using technology, but always keeping the cross-border, because you cannot have it one right without having the other right. And in that case, the level of remittance to the country is such that this is absolutely essential for economic stability. So diagnostic engagement. Third element, and for me, that's why working FCV is so important in addition to the impact, is you always pushed at the frontier of what you know how to do, and you need to design completely ad hoc solution. And that's the part where when we see the discussion, and Erica mentioned to that, I think we were recently in the same place in Dubai discussing that, the cross-border transfers to Afghanistan. Nobody has ever seen a situation like that. So you really need to unpack and to see what can be done. What can be done in the short term? What can be done in the medium term? Also rely a lot on the private sector. So sometimes these are second best, third best solution, but it actually works. And in that case, you better not intervene too much because you may actually disrupt things that are working and you facilitate and then you build on the next step. So that different time horizon and making sure that you do no harm and at the same time that you are putting in place mechanisms that prevent irreversibility down the road. So at the moment, we have this kind of discussion in Yemen, payment system in Yemen. You have two central banks. how do you work with two central banks? How do you make sure that you are not putting in place mechanisms that may end up more difficult because you are actually adding to the partition instead of solving the solution? So again, not easy solution. We have that list of problems. We are trying to find ad hoc, very practical solution. Some of it is also to be very clear on what we are trying to do, be ambitious, but not too ambitious. Now, last comment that I want to emphasize is what Jihad said on the importance of the central bank and the banking supervisor. So we all know that in fragility context, every institution matters, but I think the experience shows that the quality of the central bank and the banking supervisor is absolutely essential. Sometimes they are actually the last man standing in a lot of this, and it plays in terms of facilitating. So the payment system works, people can have access to money, you facilitate the small economic recovery. But also from another perspective, the worst case scenario is a bank that becomes owned by criminals or bad people. So there is also, and I think Jihad mentioned that, in the credibility, which is you need to make sure, and that comes to the fundamental instruments of a supervisor, that the people owning the banks are people who are on the right side and not crooks, because then otherwise you undermine the whole system. So just to give a couple of examples, but I think this is the kind of thing that we've been doing on the run and that are very important. Last comment, I wanted to go back to Erica's point, because this has been a topic of a lot of interest of the bank and my team, is the unintended consequence. So correspondent banking, NGOs not having access anymore to the payment system, then having to recourse to sometimes MVTS, to use the proper terminology, and some of them are actually good actors. But this is creating a level of risk that is very important. And sometimes it's important to bring back those discussions to the global discussion. This is also our role. So this is an example on integrity. There is another example recently in Ukraine on the cross-border exchange of information related to credit reporting. It's been discussed for 10 years, no solution. Suddenly, we found a solution in the context of Ukraine. So then you push the agenda and you facilitate the access to credit for refugees, etc. So I think there is also that mix between the country work and the policy work that is very important, at least for the bank.
Thanks so much, Jean. You packed a lot into those 6 or 7 minutes. I want to, before we talk maybe about other things that maybe the World Bank or the IMF can do and can work on, I want to go back to Erica for a moment on this point about that you just made about second or third best solutions. So, you and Jihad both described kind of the central bank as this trusted, anchor. And sometimes we don't have that. Sometimes we don't have that anchor, or sometimes there are due to the cost of compliance or the complexity, there's just no way to really go through the usual channels. So, Erica, you've written about how money or value transfer services, what people commonly call hawalas or other types of systems like that, informal systems like that, are actually an acceptable tool of last resort to the humanitarian community, but less so for IFIs and international banks. Can you say a little bit about what possibilities there are for those to become more acceptable channels? Are there ways in which they are already somewhat regulated or could be regulated to create some of these second or third best or last resort solutions that could be acceptable to a broader range of actors and maybe act as a bridge in some ways? But I know this is a huge topic, and I'm going to just let everybody know we have 5 minutes left. So I'm going to do a speed round after you're done.
Sure, thank you. Well, I'll be very quick. So you're absolutely right. So in some of the studies I and others here have been working on, we've looked into the fact that in recent cases in Afghanistan, but also over the longer term in Syria and so on, Hawala has been, of course, an ancient payment system that's been going for many centuries, but it has also become I would say, legitimate and the tool of last resort for many, for humanitarian actors, for businesses and so on. In the case of Afghanistan, for example, in studies we did on the private sector, the vast majority, if not all companies, can only make payments using Hawala or MVTS right now. They cannot access banking channels, especially to make outward going payments. So it really is a major challenge. And what we did in a recent dialogue series, which was again funded by the EU DG ECHO and Swiss FDFA, we worked with different humanitarian donors and NGOs and others to think about what more could be done to support the work of of humanitarian actors who are being forced to make use of MVTS with increased frequency and often carrying a lot of the risk burden on their own shoulders. So we thought about things like whether there could be clearer regulation and guidance. One major European donor, for example, gave their own example that within their own country, Hawala was technically illegal, and yet all of their funding into a country like Syria for humanitarian and other forms of aid and assistance goes through Hawala. So there's all these dichotomies at play. So I think it begins with regulation, guidance, and so on. There are platforms now operating in a number of poorly banked countries, like Amanacard, for example, which works with vetted network of merchants that can make use of Hawala. And this is backed by, for example, Barclays Bank and a leading UK law firm, and is being used by most European donors to remit funds into a variety of different countries now. And I think there are a growing number of mechanisms that are using different forms of technology to make use of this as perhaps an ad hoc temporary mechanism, as Jean was just saying, when needed, and in parts of countries when it's needed, not necessarily everywhere.
Thanks, Erica. Warren, I'm going to... Oh, yeah,
Nabila,
sorry.
If I can echo John.
Yes, go ahead.
A few years ago, I worked a lot on correspondent banking issues, particularly in the Pacific. And from my experience, that there's a lot that could be done to improve and increase the capacity, whether with the regulators, or the key issue usually is the KYC aspect of not having individual or people that are in touch with the financial sector if know your customer is not there. I worked in one of the islands in the Pacific in Samoa, and one of the things over there that they did not have an ID. They don't have an ID system. It's a small island, 200,000 people, and everybody knows everybody. And so there was no way to KYC the recipients of the remittances. But we discovered that they have an election system, and then people have their fingerprints in an election database. And so the system that we encourage to develop and automate actually is through the money changers we're receiving, is to verify through access to the database and election committee. So there are things that also in terms of what the regulator does with the limited resources that they have in terms of compliance and ensuring that how they prove to the FATF style requirements that they're actually implementing the right rules and regulations to ensure that they can maintain the correspondent banking.
Thank you, Jihad. So I'm going to come back. We're now in overtime, or about to go into overtime. So to Warren and to Jean, and I think what I'll do is maybe sum up here and then just give the both of you the last word in overtime. I mean, from what I'm hearing, we're talking really about maybe three different directions of action. We've talked about how the central bank acts as this trusted anchor and actually investing beforehand in financial sector development, in the integrity, systems, relationships, and trust of that institution is really one of the most important factors. Another direction was, well, it's about the complexity and the incentives of the international banking system in essence, that and all of these different autonomous and different sanction systems and compliance systems that can be a detriment and very complex, and maybe there's something that we can do there to improve that that compliance kind of environment. And then the third is, well, there's also alternative solutions that we really need to understand how they can serve a purpose as well. And even if they're not the first best solution, that they still play a role, whether we like it or not, frankly, right? And what can be done there. So there's almost three different pieces of the puzzle that if they could all be worked on, we could converge somewhere in the middle. Warren, tell me where you think the bank, the IMF, should be investing in this space. On which of these three axes would you say is a priority, and where do you think we have a role and can achieve something?
I'm going to answer your question by sneaking in a comment that I wanted to make anyway.
Say anyway. Of course. Are you a politician, Warren?
Yeah. Your comment about an attack on the central bank brought to my mind the mission we took to Zimbabwe, which had the worst inflation in history for anybody. And people attacked the central bank not to take money out of it, but to throw their utterly worthless Zimbabwean dollars at the central bank in protest. The resolution was to give it up and dollarize. In our mission, we asked the banks, where do you get dollars? Because people don't take into account dollars wear out. You have to print them, you have to get them, save, keep them. It's a really complicated. Electronic money is vastly simpler, actually. But where do you get them? Well, there's a South African market, in U.S. dollars. We get them from there. And we said, well, do you think it would be helpful to you if the central bank, coordinated that and it could store it there? And then and they said, we don't want to have anything whatsoever to do with that central bank. No, thank you. The other thing I wanted to add from the Palestine Monetary Authority, before Jihad's time, the West Bank and Gaza do not have their own currency. They use the Israeli shekel. That means I'm delighted to hear all of the progress that Jihad has reported in terms of electronic payments and so on. It's been 15 years or so since I was there, probably. And at that time, it was very cash-based. There had to be arrangements for Israeli shekels to replace the old and torn ones and refresh the new ones and bring them across. And unfortunately, the Israelis insisted that they dump it all out at the border and reload into another van to take it around to the West Bank. At some point, the banks who had the arrangement for taking back old notes and giving new ones, etc., stopped doing it and said, no, we don't trust the anti-money laundering regime in the West Bank. First of all, I don't like AML CFT stuff. I think it imposes a horrendous cost with a benefit that is hard to find. And I think that's one of the big messages for the IMF and others, that we need to think of how to lower the cost of the regulatory regime that we impose. Is it really cost benefit effective? And it really has to pass that test. So back to West Bank and Gaza, when they stopped, at that time, George Abed was the governor and Stan Fisher was the governor of the Bank of Israel. Two former IMF colleagues, knew each other, good friends, etc. Believe me, that helps a lot. We got together to say, well, how do we resolve this? And the banks that had stopped cooperating said, we don't trust the anti-money laundering regime in the West Bank. Well, via the conversation that George and Stan brought together, it came to light that the Palestinians had a more robust and compliant AML CFT regime than the Israelis did. And so they just quietly said, okay, sorry, we'll just keep up the operation.
Warren. So, Jean, last word.
Yeah, I'll be back also because I need to run after that. But
I know. Go ahead.
No,
same question.
I think you had a very good summary. I think there are two elements. One is you need to have in place the fundamentals before so that you are resilient. I think that all discussion on resiliency is really important. So we focus today on payments and integrity, but you can expand a bit better. I think from the bank perspective, that comes back to that issue of the right diagnostic and making sure that you customize. We need to bring the best minds to those discussions. And I think that's the element where we can, both internally in terms of our own design, but the convening power. But what I've seen also is that the bank, for our job, brings that ability to connect the different parts of the financial system, the convening power, as well as the access to the standard setters, etc. And it's been very valued. And I think we need to continue to do that because this is also out of this discussion that some solution may come in. So that event on Afghanistan that Erica and I attended a couple of months ago was not just about the substantive discussion. It was also to create a platform for the private sector players to discuss together to find those solutions where it's not the public sector that will do it. We may help on putting in place the foundation, but we create the environment that facilitates those discussions. And I think that's where each time having that kind of 360, what's the best instrument that we can mobilize becomes very important. But financial sector core to that agenda, preventive and responsive, and we need to say it even more.
Absolutely. Great words to end on. And I'm going to apologize to the audience that we didn't get to come to questions to you, but this means that we have to have another session on this, right? Because there's a lot to talk about, right? We barely got through the tip of the iceberg, and there was so much more, Pietro, that you wanted us to cover, but you see it's impossible. So thank you so much. Thank you, Jihad and Erica for joining us online. Thanks everyone who's online as well and in the room, and thanks to Warren and John. Thank you.
Thank you.
So we're putting the discussion on integrity. So that's my